Our speakers on this session, Professor Michael Sung, Co-Director of FinTech Research Center from Finhai International School of Finance, Fudan University. Professor Michael, here he is in the house. Great to see you again. Looking forward to your contribution. Okay, come take a seat here. Probably maybe number 2, seat number 2, just in case your moderator wants to sit down. Okay, Nadeem Shaikh joins us now, the President of Global Digital Financial Services for VEON. Nadeem, thank you so much. Yeah, I think, yes, we'll move it and everybody after that should know where to go. Faeyza Khan from IFC. Faeyza, we're so excited that you're here. We were. 5 minutes, okay, all right, we'll make sure we've got a seat. From Payoneer, the Head of Business Development, Mohsin Muzaffar. Mohsin. Here he comes, all right, come on. Mohsin is in the house. You can do it. The CEO and founder of FINCA, Qasif Shahid. Yes? No? Maybe? All right, okay. And I sincerely hope our moderator is with us. I didn't get a chance to talk to him. He's the CEO of FINCA Microfinance Bank Limited, Muzaffar Aqil. All right. Wonderful, wonderful, wonderful. So Faeyza will be joining us, but I leave it in your very capable hands. Thank you so much.
Ladies and gentlemen, good afternoon and assalamu alaikum to all of you. We have a very exciting session planned and want to make sure that we stick to the time that we have. So we are starting 5 minutes early, so I think that gives us an opportunity for maybe an extra couple of questions at the end of the session. So we have a very exciting panel. Faeyza is running a few minutes late, so she will be joining us in just about a minute. And just to start the conversation, I'd like to just frame the topic a little bit, future of finance. So the global population of the world is 7.6 billion people. Out of these over 7 billion people, there are 5.3 billion of them are adults. And of these 5.3 billion people, still 1.7 billion do not have access to any kind of financial account with any formal institution. And there are another 2 billion people which are considered to be not unserved, but underserved. So they have need for a better product, but which is not available to them. Now, when we contrast this with what the mobile industry has done, so now there are 5 billion unique users who have access to a mobile SIM in the world, so almost 100% penetration. So this is a technology which is only roughly 30 years old, which has almost now universal penetration in the world, whereas banking, modern banking, that has a history of now at least 700 years, and banking overall has a history of over 2,000 years, still is struggling to reach out to the rest of the world. So the question is that what needs to change and what the future of finance needs to look like to serve all of these underserved people. Because one thing is now proven beyond any doubt, that for any country, any nation to progress, financial services is a human need. This is no longer a luxury. This is a necessity for nations, for economies to prosper. So that is what we essentially wanted to talk about today. And we have a very exciting panel, and I'd like to give a brief introduction of the panel. I'll start by Mr. Nadeem Shaikh. Nadeem is a pioneer of the FinTech industry with 25 years of experience in this space. He was a co-founder and CEO of Anthemis, which was an early-stage VC and advisory firm. And prior to that, he was the president of First Data Corporation globally, overseeing business in 50 markets. Recently, he has taken the position of president for Global Financial Services for VEON, which is known as Jazz Cash in Pakistan. So we look forward to hearing from Nadeem in today's dialogue. Then we have Dr. Michael Sung, who is a professor of FinTech research at FinTech Research Center at Finhai International School of Finance at Fudan University. Dr. Sung is a tech venture builder and investor. He's an expert in artificial intelligence, blockchain, semiconductor, and material industries. So welcome, Dr. Sung. Then we have Mr. Mohsin Muzaffar. He heads business development for Payoneer. Payoneer is one of the largest payment platforms processing digital payments in the world internationally. He has taken multiple initiatives to empower freelancers and online workers to send and accept remittances over his 13 years of career. And then we have Qasif Shahid. Qasif is the co-founder and CEO of FinCA, which is one of the most exciting fintechs in Pakistan today. And prior to that, Qasif has over 20 years of experience in banking, in which he has led ABN AMRO and then launched the MCB Lite service for MCB, among many other initiatives that he has taken. He's considered a thought leader in the fintech space in Pakistan and beyond. So welcome, Qasif. We're missing Faeyza Khan, who is representing IFC, and she is stuck in traffic, and she'll be joining us momentarily, and I've just told her to walk right on the stage as she walks in. So, so before we begin, I wanted to open up the dialogue by asking all of the panelists, by giving just a short, a 2-minute statement, by scoping their view on this subject as an opening statement, and then we'll do a round of Q&As, and then we'll open up the forum to all of you if you have any questions. Sounds like a plan? Okay, great. So, Dr. Sung, may I begin with you? And if you'd like to give a brief statement.
Sure.
Thank you.
I'd like to reiterate something I mentioned in my talk tomorrow for the general audience, right? I think that we live in a very unique time in history where the new internet technology du jour, which we call blockchain technology, is really poised to transform the world. So without getting into the technology, I think the implications are massive. What we are able to do now is have a way to, in a decentralized way, have a trusted way to transfer value between different parties without the need for centralized authorities like banks and centralized business models. Okay? So this has a very profound impact on society because all of any economy is essentially the transfer of value, right? And we're at a very unique moment in history where the technology is maturing, the business models are maturing, the regulation is maturing, and the industry traction is maturing all at the same time. And literally this year, 2019, is where it's all coming to the forefront. So it's like me saying to you guys in the late 90s, like, you should look at internet technology because it's radically transformative. And much like the original internet technology is radically transformative across all industries, right? And so today I'd like to take my moment here to talk about what that means for governments, because I think there is a profound potential impact for Pakistan in particular. Like, I am at the FinTech Research Center. I'm a founding faculty member of the China Institute of Economics and Finance, and we provide policy recommendations for Chinese government. And it looks like Chinese government is not so supportive of this new internet, blockchain, crypto economy, right? And I can just say that that's not the case. Nothing can be further from the truth, right? China is in fact banning Bitcoin, much like Pakistan is here. But in contrast, China is planning a very massive, I would say, holistic strategy to create their own digital currency, right? Since 2014, the People's Bank of China has been patenting payment technologies using blockchain and are going to test beds with something called the DCEP, the Digital Currency Electronic Payment. You can think of it as China Coin, right? And China Coin, or this crypto RMB, will soon be the currency that they release all up and down the One Belt One Road. And is there strategy to eventually become a super currency, reserve currency of the world? And so bringing it back home, I think here in Pakistan, there's a unique opportunity. If you wait 2 years, it will already be too late. Because right now, there's 100 countries in the world looking at creating their own digital currency play. Around a dozen of them are in the sort of advanced stages of development, like China is, right? And so if there was a technology where Pakistan can leapfrog and basically become competitive at the world stage, I believe it is the adoption of blockchain and the embracement of digital currencies. So I actually highly recommend to people here in the audience, as well as to the government, the new government in Pakistan, which is, I would say, very open-minded to these type of things, to seriously look at the implications of digital currency and to embrace it, because it can solve a lot of fundamental problems that are facing the country today, namely foreign direct investment into the country, payments, and the ability for people to exchange value and interact with the world at large. So that's my statement. Thank you.
Michael, thank you. What a great opening statement. I think you covered a lot of space in your short comments, talking about what the Chinese government is doing and what's the way forward for Pakistan. So thank you. Nadeem, over to you, please.
Thank you so much.
By the way, sorry, let me just quickly introduce Faeyza Khan, ladies and gentlemen, has joined us. Faeyza is representing IFC, so welcome, Faeyza. Over to you.
Well, thank you so much. Firstly, I'm really jealous because until recently, until a week ago, I was considered a startup guy, and I could dress as Qasif is dressed, and now I have to wear this formal jacket and so on. Just a short statement. I think this idea of FinTech, because I was really at the heart of FinTech when we started in Europe and the US, is really something in 2010 when I started thinking about FinTech and starting a fund around FinTech. Every one of my colleagues in financial services and abroad thought I was crazy. And I'd gone mad that I've given up my nice corporate job to go into this space, something called FinTech, right? And FinTech, is a transformational thing for a lot of people who was kind of like, what is this stuff, right? And so just be clear, so we understand this stuff, is FinTech is not about taking the same old products and putting them on mobile. That's not FinTech. FinTech is really a major transformation of the way you think about business, how you operate the business, how you partner in that business, what kind of business model you think about. It's like the cost structures is 10x less than what the banking financial institutions do today. The revenue potentials are 10x more. The way to reach the customer is completely different. Customer segmentation, everything we learned about customer segmentation does not apply. The way to reach those customers, how we think about distribution channels does not apply. So it's really a fundamental rethink of the space, right? And so this really phenomena that we now think globally, and we have all these conferences on FinTech, even in the UK, US, it was really until 2014, 2015 before this became mainstream, right? When I started FinTech in 2010, so it's not a long time ago, there was maybe 4 people in my LinkedIn profile of thousands of people, right, who had FinTech in their LinkedIn profile. Now almost everyone I know has FinTech, right? So it's kind of, we have to be thoughtful about what this means, yeah? I think yesterday at the dinner, and I'm just going to kind of summarize this, General Hayat kind of summarized this in a different context. We talked about strategic environment, strategic moments, right? And I think in the FinTech globally, and especially also in Pakistan, there is some things that have to come together. Yeah? And there's some things that have to come together. There has to be a consumer need for this stuff, and we clearly have a need which goes beyond, and we'll talk a little bit more about it, which goes beyond bank account. No one wants a bank account. We'll talk about that. It's a consumer need. Is the capital available to invest in these businesses, and substantial capital, the right kind of capital? Is not just big capital, is venture capital, angel capital? Is there a regulatory environment? The regulator has to be switched on and kind of willing to think about different ways of enabling this stuff, because the regular regulation that applies to financial services does not apply. Some of the collaboration between different regulators, between the telco regulator, health regulator, finance regulator, I'll talk a little bit more about in the Q&A, that's necessary. The policymakers have to be aligned. Right? The innovation, the entrepreneurs that are operating in the marketplace have to be aligned. The financial institutions have to be thinking about this. Some of the technology that's now driving the FinTech businesses, right? When we talk about FINCA and so on and FinJA, This was not available to us 5 years ago. So when people say, well, like, we have been thinking about fintech for a long time, and all these applications have been out there for years, no one's done anything. Actually, they were working on old models. Just because we were putting on a mobile doesn't mean it was fintech, right? So this technology there and the talent associated with all this will come together. And that is actually coming together very nicely in Pakistan now. And this is something that came together in the UK in 2014, 2015, 2016. Right? London is far ahead, so people think about Silicon Valley as the innovation. For fintech, it wasn't Silicon Valley. It was actually a lot of the innovation happening in the US was in New York, in Chicago, in Dallas, in other places which are not, where you would not think about technology innovation, because this is not really technology innovation. This is financial services innovation going on. So some of the best places, we talk about blockchain, some of the best places with blockchain are actually sitting in Indonesia and Estonia. And in Switzerland, right? Not centers that you would think about as heart of innovation around this stuff. So that's kind of the perspective. I think we have just started to scratch the surface on financial services, financial technology, the future of finance. There's a huge opportunity, and we'll talk more about that in the Q&A and try to develop the story, but I just wanted to put that context out there for you. Thank you.
Great. Thank you, Nadeem, for giving us the real context and definition of fintech. That I think that's good to establish at the beginning of the dialogue, so thank you. Mohsin, over to you, please.
Thank you very much. First of all, it's a pleasure, and it's an honor to share the stage with such amazing people. Future finance, obviously, is a broad term and a broad topic, so I'll try to focus on my learnings and where do they overlap with the whole future of finance, as we know. I come from a company, Payoneer. I'm sure many of you, if not all, are aware of Payoneer, and we have 4 million plus customers, and we are operating in 200 plus countries worldwide. For end-to-end transactions, we work with banks, with various financial institutions, and third-party processors. There are two things that we've came across till now, and I think the first thing is the technology, and that is the elephant in the room, so let's take it first up. Everyone talks about technology, and everyone knows for a fact that if we have to move forward, we have to implement technology and we have to embed technology in our solutions, not just an old solution, but as you rightly mentioned, we have to come up with the new products, new solutions, and as you call, new platforms. But why don't they do it? At least not many of them are doing it. I think there are two main factors to see it. The first one is, what technologies are you looking for, and where exactly do you need to embed those technologies? I think there are 4 to 5 key areas. If we start with analysis, we start with risk, we start with acquisition and onboarding, and then we use technology to remove the friction we have. And it doesn't have to be rocket science technology. Some things can be started with utmost simplicity to remove the friction. And while we are on the technology aspect, I think the other thing is, and many of the financial institutions around the globe are now looking beyond the traditional background of their talent and mix-up lineup to look for digital strategists or data strategists, data analysts, who, going beyond the, traditional background of accounting and finance. And I think that's really important for the institutional benefit and for the customer's benefit. Because if you have that sort of a mix in your team, then the analysis that comes through data, that is not only helping your institution, but your customers and your business partners. For example, you can guide them where to invest and where to divest. So I think those are two main aspects of how to embed the technology. And I think the second thing is, us financial institutions, we need to be very customer-centric. And this is easier said than done. Because being customer-centricity, that has a value, that has a price on it. And now as our users, or if I may, our potential users, they are adopting technology. And now we have to go where our customers are, or where our users are. And for that, we have to meet their needs. We have to exceed their expectations. There are a few aspects to customer centricity, and we at Payoneer, we're striving really hard to achieve that, and we have achieved, with utmost clarity. The first, obviously, is the ease, then the cost, flexibility, and security, and then there comes if you have a platform. Now, there is a core difference between a product and a platform. And again, I'll go back to my institution where I work, and what we are working on is we are working to build a platform. And I think it's not just creating one platform. Every financial institution, they need to create platforms, not just a product. Because a platform in itself is an ecosystem where you're not just offering, receiving money and sending money, but you're offering, various services, like, for example, working capital, for that matter, or paying VAT, or enabling other technologies to use your services. So I think it's really important for us financial institutions to build platforms and help the user base and empower them to grow.
Thank you, Mohsin, for sharing with us the approach that Payoneer takes in analyzing the market. Qasif, over to you.
Yeah, I'm going to try and answer what you asked, which would be like a peek in the future. What I'm going to say now, I think a lot of people share this view, which is this, that in Pakistan, and especially in Pakistan, but in some of the other emerging markets, but in Pakistan most definitely, I think we are at a point, we are at a cusp of a great social and economic change. Now, this social and economic change is going to come in because 100 million people in the next 3 to 4 years are going to reinvent their relationship with money. And that means a large-scale behavior change and a transformation would happen. Now, this would be possible for 2 or 3 reasons. The first one we need to understand is the promise of instantly delivered digital credit. Why is it that 100 million people would reinvent their behavior in the next 3 or 4 years? Is because as they go out and start to make payments digitally, there's going to be, people would know where they're spending money, what their cash-ins are, what their cash-outs are. And as a consequence, they would be lent to. So what I'm saying is the promise of instantly delivered digital credit would become one of the largest behavior change reasons why, this transition would happen. That's the first part. The second part is that for people to make such large-scale behavior change, there would have to be a lot of new use cases that would come onto these mobile wallets and bank accounts. Use cases meaning new services. Now, almost all of these new services are not going to be created by the incumbents. These new services are going to be created by the startups and the fintechs, and these new services would start to appear on internet banking, mobile wallets and bank accounts of the incumbents, meaning the users will have a plethora of services to indulge in when they go digitally. That's number 2. Number 3 is that this has already happened. Pakistan is now sandwiched between China and India, and China is already cash light. India is, going that way. These are the 2 largest countries in the world. So if it can happen there, it will happen here. So what I'm saying is that, very quickly, 100 million people will transform their behavior in their personal lives. Now, when that happens, a second set of change is going to set in. And the second set of change is that people who have already transformed their personal lives and are now interacting with money digitally are going to start to ask questions that why do these things don't happen in businesses and SMEs? And the next wave is going to be that the businesses and SMEs are going to start to push out cash, check, paper, pay order, demand draft, and all that other, paper-led instruments out of their businesses. And the businesses that would do that are the ones that would disrupt the ones that haven't done that. So, the second change of businesses taking cash and paper out is going to be a consequence of the first change, where people are going to personally start to behave differently. I think all of this transition would happen in the next 3 to 4 years here in Pakistan.
Wow, that's very powerful. So, there is a social and economic change in process, is what Qasif is saying, and he believes that 100 million people will change their relationship with money over the next few years in Pakistan alone. That's very powerful. So Faeyza, we're talking about future of finance. So just overall general comments, from a perspective of the work that you are doing from IFC platform, and how do you see that impacting how future of finance will look like?
Hi. So it's great to, is it on? Now it's on, sorry about that. So I will just take a step back. Everyone else has spoken about the future, so let me talk a little bit about the past, because it's the past that drives what happens in the future. Right. So I just want to talk about the genesis of why IFC, which is the private sector arm of the World Bank, why are we in the business of tech, why? Because this is not our niche space, technology. That's for you young yuppies or young Turks to, take on fintechs.
And older ones too.
Thank you for that. Pakistan is among the 25 countries that are part of the World Bank's core countries that will contribute to financial inclusion globally. So, so in Pakistan, we are partners with the central bank, and we have to help them implement this agenda, which dictates that by next year, and that sounds a little crazy, but by next year, we should have at least 50% of the adult population financially included. And that is not a realistic ask unless we leverage all our forces using technology, other parts of the puzzle, which is e-commerce, business, so and banks, of course, because it has to be a bank-led model. So that is the genesis of why we're quite heavily entrenched and trying to push our agenda for digital finance. So two things I just want to talk about. One is this idea that we've floated a couple of months ago. And yesterday, actually, we had an event in Islamabad to formally launch it amongst Pakistani banks and fintechs. That is the AFIN initiative. AFIN stands for the ASEAN Financial Innovation Network. So this is basically a kind of a Tinder for banks and fintechs to meet and experiment with each other. Because, the regulatory environment in all countries actually, it's very restrictive. It actually doesn't allow a bank to experiment much. So AFIN gives you this kind of a digital platform where in exclusivity you can experiment with each other. So you can actually, see what a certain model that you envisage, what would it actually look like? Right. So AFIN gives you this opportunity to, seek. So you as FINCA, you would, well, right now you've got a great partnership going on in Pakistan. But tomorrow, let's say Qasif starts to expand into other geographies and he's got no time for FINCA. Touch wood, that won't happen. But something like that happens. You've got this platform whereby you will have access to hundreds of fintechs all across the globe. And I think this kind of platform, it can be very cost effective as well. I mean, you can go out there, you can search for the best, you can actually do sort of price checks as well. And IFC, along with the MAS, which is the Monetary Authority of Singapore, so we are both partners and we've developed this platform. And I would encourage all of you to actually go on the website of AFIN and check out this initiative. So that's one thing. The other thing that I just wanted to touch upon also, and I think it's going to, we're just at the cusp of it, and I think this is going to become big in Pakistan, and we hope that we can be the convener and we can bring fintechs and push them into the space, fintechs and banks. That is credit scoring models. Mm-hmm. So this, of course, someone mentioned China. So we have, we've had relationships with Ant Financial, Alibaba. In fact, we are investors in the largest bank in China, which is the Postal Saving Bank of China. And again, this is something that we are trying to experiment with in this market as well, which is using a credit scoring model to reach out to small farmers, because that's one of the most unbanked areas, because bigger banks will obviously not get into that space. And microfinance banks like you may not have the kind of equity muscle to do something very high risk and experimental. So I think a credit scoring model, and here we're actually going to be bringing in all our Chinese expertise. So for the first project, which we hope to have a demonstration effect, we will be bringing our entire team from China, which will be a credit scoring expert, IT expert, a microfinance expert, of course. So this is, what we're hoping to get out of this is, establish some kind of a credit scorecard which benchmarks a lot of the agri-info which is out there in Pakistan right now, but it exists within different units or different government departments, somewhat in the private sector. For example, the PITB, it's got a lot of info about satellite imaging of agri areas, and they've actually mapped out the agri map of at least the Punjab province. So we're hoping to even bring in, and that will be a next step, of course, we're hoping to even bring in AI through this kind of a mechanism, whereby a farmer is able to borrow in a couple of seconds, and his info will be benchmarked against national level info, which will be feeding into the credit scorecard. And then we're also thinking about futuristic stuff like, what if we're able to combine this with non-financial services as well, and the farmer can get information about, for example, there's a pest attack expected in this area, and he should digitally be able to see what is the best kind of pesticide which is tuned to attack that or address that problem. And he should be able to see the prices, and he should be able to see all the distributors. So that sounds a bit futuristic, but if it's doable in China, it's doable in Pakistan.
Great. Thank you, Faeyza, for sharing with us the framework that IFC is sharing and playing its role in the digital finance space. So I think this sets the stage really well. I think we are well oriented now about what all of these experts are thinking about, what the future of finance is going to look like. So we'll try to do now a round of questions. We have two options. I've been told that if we want to do audience questions, then we need to stop the questions with the panel at 2:30. 3:30. Okay, so we can mix and match. So what do you think? The audience, do you want an opportunity to ask questions? Raise of hands. Okay, so it seems like we have a couple of people who want to ask questions. So I'm going to go through the first round, and then we'll open up the space for questions. So not yet. We're not taking questions yet. Okay, all right. So Nadeem, I'll start with you. Since we talked about, in my beginning statement, about number of people who are financially excluded today, and that brings up a good question about the way we define financial inclusion. So in your view, is the definition of financial inclusion does justice to the subject, or is it holding us back?
Great question. So I'm going to make a statement, and then I'll look for the exits. I think the biggest injustice we've done to financial services is to come up with this term called financial inclusion. And I think the people who have been talking about this and stuff, it's the biggest disservice we've done to this area. The definition of someone that is, so take an example, a domestic servant, right, working in, let's call her Shabnam, right? Someone who is, we have defined her as poor, illiterate, has no access to lots of things around her life, and and thing. We say the only way to save her is to give her a bank account. Somehow magically if you put some money into his bank account, that will save us. It hasn't saved the rest of us either, right? Bank accounts haven't saved any of us, right? So the idea that someone who is working She's a entrepreneur. She's trying different things. She is married, has kids, is thinking about her education needs for her kids. She's thinking about the family health cares. She's thinking about energy. She's thinking about housing. She's thinking about savings, but more from a community perspective, pooling money together, right, in terms of what we call committees in Pakistan, right, committees for thing. She's thinking of really a whole bunch of dimensions. She's thinking about the water. She's thinking about how a neem tree will save her children from malaria if she plants it in the neighborhood, because it has a natural malaria repellent stuff. These are things that she's thinking about. And somehow we've taken a very sophisticated set of needs and put into this understanding that financial inclusion from a set of banks that are running high-cost models is going to save the day, right? So I think fundamentally we have to rethink this space. And we have to, what I term, I've been calling it for a while, writing about this, investing in this area, I think it's called financial wellness. This is what you started talking about, the convergence needs. Financial wellness for me is wealth, health, and happiness, life, right? And there are all kinds of dimensions. And by the way, this definition doesn't apply just to the bottom of the pyramid. It applies to every one of us in this room and everyone within that, right? Also applies, the financial wellness term also applies to the SMEs business as well. It's the same thing. What's their capital requirements? How are they thinking about selling? How their distribution? What's their energy needs? How do they run the energy stuff to operate the store? All the things are combined. So thinking about our products in a siloed mentality, like we've done checking accounts and savings accounts and credit cards and mortgages, which is exactly the same from any bank, exactly the same thing, is not the way to go. So I think it fundamentally requires us to broaden the thinking about this in a very innovative way, thinking about the kind of a different kind of cost models and structures to provide these services. A product that costs 200 euros, dollars, an equivalent to manufacture is never going to be profitable for a customer that has a couple of dollars to spend. So you have to fundamentally rethink the cost model, which is what a lot of fintechs around the world are doing, and that cost base is 10x lower. So I think that's where we need to go. And this is where, really, from a perspective of VEON, and this we're thinking of Jazz, as they're thinking about, we have 5 million customers in Pakistan today, and we are rethinking this. We are no longer willing to be a financial inclusion play, a microfinance bank play. That's not the name of the game. Is rethinking financial services completely from top down, bottom up, to give a very different proposition. That's where I'm thinking about.
Excellent. Thank you. What a great call to action, that instead of and changing the definition, being a restrictive definition of financial inclusion, think about financial wellness. So great point, Nadeem. Thank you. Michael, next question is for you. When we look at the digital financial services, China, the example of China almost stands out as a miracle. I mean, it's such an anomaly when we look at the rest of the world and what has happened in China. And it's the largest cash-light country in the world now. So I'd like to ask you, what did China do right that countries like Pakistan can replicate?
So I think the benefit of China is that it actually should get more credit for the ability to experiment and to test new ideas, and then they have actually a framework which I think made China great, right? So if you look at what the stereotypical China is this very communist, authoritarian, backward ecosystem, it was true in the past. But look at what China has done for areas like sustainability and the environment. Half a decade ago, if you said that China was going to lead the world in terms of these initiatives, you would have been laughed out of the room. Yet, credibly, China has adapted to that ability. And I think what China has as policy is an ability to experiment on the mass level. So what happens is China will test different policies in different regions of local regions where it's a little bit out of trouble and you can't get into too much of a mess. They actually have a saying. They're like, you cannot start a hurricane in a teacup, right? If the area is very constricted and small, you can do experimentation. You don't have to worry about messing up the overall system. So for things like tax reform, China doesn't have a property tax because everything's owned by the state. So they're testing now real estate property tax. And how do they do this? In different areas of China, they'll test different policies. And they'll see what goes wrong, what goes right. And then for the policies that work well, they'll percolate to the provincial level and then eventually to the national level. So now we have a way for China to adapt to the times. And this is actually, I'm an entrepreneurship professor. This is actually a very tried and true entrepreneurial technique called lean methodology. You basically figure out the proper way of doing things by making experimentations and pivoting and adjusting. So now apply that principle to what's happening for this blockchain crypto economy, right? So as an authoritarian central state, the idea of Bitcoin is a little bit threatening because it's outside the official system. They have no control, right? So what they're doing is they're doing the strategy. There's an island called Hainan, and it's the port terminus of the One Belt One Road. And in this area, they're making it to a free trade zone. They're making it into an area where blockchain liberalization, you can do test beds and experiment with blockchain and figure things out. And importantly, it's a place where cross-border liberalization is going to occur at a mass level. And so I think that's what needs to happen here in Pakistan as well. There has to be an ability to be able to adopt these new technologies, to experiment, to figure out what works and what doesn't, to not be fearful of failure, because the failure will inform you of what to do right.
That's a great point. What a great insight into what's the secret behind China's success. So it's mass experimentation. Thank you. My next question is for you, Mohsin. Pakistan is among the top 3 freelancer community in the world, and Payoneer is one of the largest payment processing platforms that they use. What obstacles that you see that need to be removed to enable these freelancers even more?
Right. So there are 2 aspects, basically. The first one is related to soft and technical skills and how do we empower freelancers. So let's not go there because we are in the future of finance. I think 2 things we need to do is right now we have outdated regulations. When we're talking about technology disruption and we're talking about ease, speed, and creating platforms and an ecosystem within itself, I think that has to be backed by the new set of regulations. And I think this is where freelancers in Pakistan are struggling right now. And you know, part of it is that they're failing to actually bring the inflow of USD in Pakistan. So I think that is on top of our mind, that we need to create new set of regulations, and we've already presented some regulations, suggestions to the State Bank and Ministry of Finance, and fingers crossed that will be there. And another thing I think what we can do in the financial space to help these freelancers is, in the local scenario, as honorable colleagues have been mentioning, the social behavior and how do we need to up the ante with not just the payments but overall structure. I think the local financial institutions, including banks, need to understand that this is the future economy, and these are the people who are actually going to build the economy. It's a trillions of dollars plus economy right now. And if I go to a very very basic sense, freelancers, they even struggle to open a bank account, right? And let alone talk about the credit products, or let alone talk about, including AI and those sort of things. So I think those are the set of regulations, set of education, training to the financial institutions. I think that would create an enabling environment for these freelancers, and then they can further grow globally.
Right. Thank you, Mohsin. You talked about the need to update the regulation and then addressing the basic needs of the freelancers, so thank you. Qasif, I wanted to ask you that in Pakistan, 80% of the non-farm labor works for SMEs. And you alluded to importance of SMEs in your opening comments. And the share of SMEs in private credit is only 8% in Pakistan. And do you see there is a role that fintechs can play in facilitating SMEs in terms of financial services?
Yeah, thank you for asking this question. Yes. I mean, that's what we do at Finhai and SimSim. So, we asked ourselves this question, that who's the most underserved segment in the market, and clearly it's the businesses and the SMEs. And then we asked the question that, who are the wholesale users of the banking services? And that happens to be the SMEs and the businesses as well. And then we asked ourselves the question that where is the highest percentage of the most driven and talented people? And we figured that's the SME entrepreneurs as well. And then we figured that these SME entrepreneurs in markets like Pakistan have actually grown in spite of the banks. It's not because of the banks, they've grown in spite of the banks. So obviously, we've figured that we would work with them. And Finja, as a FinTech, figured that all businesses have to do two fundamental things to thrive and to exist. And those are, number one, they have to make disbursements. And number two, they have to collect. So they have to disperse money and they have to collect money. All SMEs have to do that. So the question is that what is it that a FinTech can do to solve this? Now, if you peel the onion, it becomes apparent that on top of these two functions, disbursement and collection, there are three distinct relationships. The first relationship is a workflow relationship. The second relationship is a vendor-supplier-partner relationship. And the third relationship is the customer relationship. So workflow, you pay money. Your workforce, you pay money. Your customers, you collect money from. And vendor suppliers, you make payments. So what we've done at Finja and SimSim is, we are saying that, look, guys, we respect you. And we are going to reinvent the engagement model that the banks had with you. And in our engagement model, what we are saying is that when we partner with you, we would let you digitize and transform these three relationships, customers, vendor suppliers, partners, and your workforce, and make disbursement and payments at zero incremental cost to you. So when we come in and become a partner with you, we let you move the needle on your business and all these three relationships, disperse as much money as you like, collect as much money as you like, but there are no charges. There is no incremental output that you would have to pay us. SimSim and Finja only makes money when you've already won. That's the new engagement model, and that's the respect with which you would have to work with businesses. How do we make money? We make money through float. But we only make float. Float is interest income on current accounts, but we can only make that interest income if the corporation actually goes out and opens salary wallets in which they would disperse payments, right? And then there is money. And then we go out and lend to those employees of the organization without any liability of that company. But I can't lend to your employees till the time you actually disperse salaries. And then I go out and say that you can go out and make free payments up to 20 million rupees to your vendors, suppliers, and partners. Now, only when you start making those payments and you've realized new value, can I come in and lend to your vendors, suppliers, and partners. But when I lend to your vendors, suppliers, and partners, the stability of those partnerships increase for you without any liability for you. So I can only win if you've already created that new value. And in the end, we're telling the SME that when you receive payments into your shops, into your websites, into your apps, you can offer them SimSim wallets and receive instant, free, frictionless payments at zero cost. But and then I can go out and lend to the people who are making payments on the SimSim wallets to buy from your business. But I can only do that if you've first given them the wallets where there's no cost. In the end, we are in a unique position to lend to the core SME, because now we know how much salaries they're paying. Now we know the vendor, suppliers, and partners payments they're making. Now we have a view on their sales. So we can lend to the core SME. But if you see the innovation in all of this, the innovation is that for a business to go through large-scale behavior change, which is to take cash out, check out, there is no cost. So we've taken the cost out of the behavior change. And as the business transforms and takes cash out of themselves and start winning, we win as a consequence, right? So our design is to win when the business has already won. And we take a lot of pride in that. And I think as you see fintechs step into the B2B marketplace, you would see that they would innovate in the engagement models. And that's what's going to make all the difference.
Thank you, Qasif. You covered a lot of ground in terms of how vendors and partners and suppliers all will start using digital payments that become a proxy, and through free payments, that's how you can lend. So that's how a digital model to serve SMEs in view of Qasif would work in Pakistan. So thank you, Qasif, for sharing that.
Thank you. We already have 300-400 companies now doing this, and every week we get new companies.
Fantastic.
So if there's some in the audience, you should check us out.
Okay, so Faeyza, let me ask you this question that I know that IFC has a very large portfolio of investments, and you invest in what we like to call legacy banks also, and then some futuristic fintechs as well. What is one thing that you find in the Pakistani context the most exciting, that you think would have the most impact on the future of financial services in Pakistan?
In one word, you. I will tell you the reason.
I didn't prep her for this question, by the way, but please, yeah.
And the reason why I'm saying that, there are two things that I would just like to give a shout out to, both the FINCA-FINJA partnership, and also, the fact that FINCA-FINJA introduced the QR code for the first time. I think you were the first practitioners in Pakistan to apply the QR code. And as many techies in the audience would know, it has the most minimalistic cost footprint. So, and I think even the giants amongst banks have now followed your suit. So I think that's something that you can be rightly proud of. Another a point that I would like to appreciate both of you is because this was the first time that a small microfinance bank thought about how it can get around this problem, because this is a problem that even the giants, HBL, UBL, have not managed to solve, because they're obviously huge organizations with huge IT footprints, and they have all these different heads of departments, and it's the whole gamut. So this was the first time, and it's a very innovative model where a microfinance bank reached out to FinTech, who is not housed within their structure. So there was no problem of cost, and this was a unique model. So let me just shout out to that aspect. And now to your question about what's the most exciting thing. I think the most exciting thing that's going to happen in Pakistan, and we're right on the cusp, is partnerships, collaboration. And I see on that panel, there's so many parts of the puzzle that can solve this problem of access to finance, to the lower strata, to SMEs. I see a microfinance bank, FINCA. I see TCS, which is the largest local version of the DHLs of the world. I see Huawei, I see Pasha. So these are all, I think, parts that fit into the puzzle to solve that problem. So a bank alone cannot win this battle, right? Because a bank at the end of the day, has to look at its risk return. It also has to look at the regulations, which can be quite cost heavy. So a kind of collaboration where, e-commerce and technology, led by a bank, who can be a face of that product. I think that is the kind of technology or direction that we would like to get into. And it makes me so happy that, now following the suit of not just you, but other microfinance banks, the bigger banks are now taking, for example, agri as a very, very viable asset class. They're starting to take housing as a viable asset class. So I think, going beyond the traditional niche sectors, it's absolutely wonderful that, the smaller players, I think forced by compulsion because they had to survive in a very competitive environment, I think that's actually nudged them towards more nimbleness and innovation. So that's going to happen.
Thank you, Faeyza. Faeyza talked about the power of partnerships and how constructive partnerships between technology and banking is going to shape the future of finance. So I think this gives us a nice one round of views from the panel. We have about 10, 12 minutes left, so let's open the floor for questions from the audience. So if you have any question, please raise your hand, and it would be nice if you just introduce yourself if you're representing an organization, then the name of the organization also. And I would request that you ask questions and withhold the comments so we can ask for a rapid response from the panel and more people can ask questions. Thank you.
Thank you. Fahad Mir, S&P Global. Just had a question regarding, in terms of financial exclusion, I've heard comments about that. This is not really meant for, or shouldn't be meant for financial inclusion, but instead financial wellness. Just taking into what the underserved society, part of our society are today, the uneducated, the elderly, the disabled possibly. If you look at them, what are some ways that within your design mechanisms of designing these new technologies, what is being done that this new advent of technology within the financial services doesn't serve as more further financial exclusion for those groups as well, particularly in terms of if we're going towards lack of cash in doing business day to day. That's it.
I think the question is from Nadeem, but then Michael also wants to comment, right? Because he talked about the definition. So Nadeem, you want to take a first crack? Yeah.
I think it's a great question. And I think, you know, we have to redefine what we mean by the definition you just used. You know, someone's uneducated, is, you know, disabled, elderly. All of them are using the social channels. They're all on YouTube. They're all on WhatsApp. My 84-year-old father is on WhatsApp. His whole entire gang of friends are on WhatsApp, right? And they're using that as a different way of engaging. Yeah? So that definition of someone, you know, requiring to go physically to a space, and that's what we fully need, is very different. Yeah? So how do we service them? How do we provide that product which is wholesome kind of thing? Is a very different model that's available to us today. That none of those folks have to be excluded. Education, the way we define it, which is a college degree or master's degree or something, or you know, a BSc, is irrelevant. They don't need to. They know how to use a mobile. They all have a mobile, right? And that doesn't mean, and so all these, some of the best examples of innovation coming out of Africa, I've invested in some of them, they are USSD platforms. They don't have to be smartphones. This is a myth that we've created ourselves, that everything has to be a smartphone, everything has to be an app. There's some of the best models out there for some of the stuff that Faeyza was talking about. Is USSD-based, text-based messaging. Simple. So technology is an enabler. And the basic technology is an enabler, right? So we have to rethink the way we are interacting with these customers and how we're engaging with them. And I think that's a challenge. And that's where, for the first time in a long time, I've been in this industry 30 years and so on, really in only recent history has the social side of engagement, how people are interacting, how they're talking about. Qasif talked about this a little bit. Some of the, you know, some of the freelance stuff that's happening is a new way of engaging, a new way of servicing, the data part of it, which is huge. And the technology part, which includes, by the way, some of the blockchain stuff, you know, is really redefining that business model in a way that is very cost-effective and also very distributable and scalable. And that's what we're trying to get to. That's really it's available to us now. There's nothing stopping us. It's just now the thinking, the business model, wrapping, how we price it, you know, the ecosystem, you know, some of the regulations are in the way. We need to kind of, you know, play together on that stuff. That's available to us now. It's no longer a nirvana. It's no longer a dream. It's no longer something that has to happen in the future. This is today. It's available today. We can do this.
Michael, would you like to add something?
Yeah, I'd like to comment on this. Maybe using an example from the sort of blockchain and crypto world, where I feel that these technologies in some way are going to provide much more massive financial inclusion for the masses. Okay?
Wellness.
Yeah, so for example, as you know, everybody here is very interested in CPAC, right? And we have this huge corridor where China is investing over $62 billion to develop. And the first mover of that is infrastructure, namely roads and highways going from north of Pakistan all the way down to the port. Let's say this road goes through an area of town where there used to be a slum, all right? Or there is a slum. And in order to make way for this road, they need to get rid of the slum and move everybody out. Now, in the past, that's what they did. In China, they literally just told everybody to move, and that's it, okay? The people who were living there, maybe for centuries, the underlying value of that land is not, they cannot capture that at all. They're just moved out. In addition, there's a problem with infrastructure. The major problem with infrastructure is if you build a high-speed rail through that area, in many ways, the infrastructure cost is sometimes much more costly than the ticket sales will ever allow you to make up for that. Right? So there's a couple of problems in terms of the sustainability of the infrastructure. Then you got this inclusion problem where the people who are benefiting are not the people who were displaced or people who live there. What can technology do? I'll use an example. This year, there is a very interesting new phenomenon, what we call asset-backed crypto. Okay? The ability to take a cryptocurrency and having it, instead of being virtual in value, you can actually tag it or link it to an asset. So in this case, let's think about real estate. So we get the real estate of this area of the slum, which has now been redeveloped. And because it's redeveloped, there's going to be a train station there. The land value is going to be much more massive. Okay? So what we can do is we can link the real estate to a cryptocurrency. And because of the infrastructure development, we can actually pay off the infrastructure development in this cryptocurrency so they can get access to the land appreciation for the infrastructure, not just for anything else. So therefore, it becomes viable from a standpoint of development. Okay? In addition, this cryptocurrency can also be given to the people who are displaced. So they actually get ownership in the underlying real estate as well. And anybody else who wants to come and develop, let's say you want to put a Serena Hotel there. Right now, this beautiful hotel, I don't think anybody in this room can actually afford to, participate in this. Okay? But if this was tokenized, it's fractionated in ownership, then everybody in this room who had $100 can now participate and invest in the development of the real estate and participate in the upside of this real estate. Real estate is a $217 trillion market. It represents 60% of global wealth. It's also the most unfungible asset class there is. Unfungible means that you cannot trade it around. Forget about trying to buy real estate overseas where you don't know any of the regulation. Okay? With this crypto technology, anybody who has a smartphone can now own a piece of real estate. And this token technology can incentivize players in the market or to pay off people in the market who need to have benefit. And it can be traded around in a friction-free manner. It could be put on exchanges and provide massive liquidity to the market. In the financial world, there's something known as the liquidity premium. If we have two exact same assets of value, but one thing is tradable because you can trade it on exchange and one thing is not, the tradable asset is worth 20 to 30% more. It's called the liquidity premium. Okay? So just by tokenizing real estate, now we allow new infrastructure projects to happen. We can benefit people who have been displaced, the people who not have access to any of the upside for this type of asset class. And we have massive liquidity that goes on in the market. There's endless innovation from the business model standpoint to allow this to happen. So this is why I feel that this type of technology is massively beneficial. And I think that if the government is able to support this type of legislation to allow this to happen, then you're going to see massive amounts of investment into the country, which will be beneficial for all.
Thank you, Michael. And I think that's maybe we can take one last question here. So then that's it. Yes. Not working? Can we get another mic, please? Yeah.
Okay, my name is Zishan and I'm basically from Kashmir. So my question is a little different, but it's related with it. Technology, on one side, technology itself is a business, and on the other hand, you see technology enhancing a lot of businesses. So in our area, Kashmir, we have like 3 potential areas. One is tourism, the other one is agriculture, and the third one is livestock. So what I've seen throughout my life, there is no intervention in technology. We don't have even any institute, any school or any university giving education degree on these 3 things. So what my question is, do we have any plan or how we see it that in future we can incorporate the digital business models or modern technology in the curriculum, in the education system of this country to give equal opportunity to people living all across even the far-flung areas of this country. And the main point of this is that I have personally seen a lot of potential and skillful and practical ideas being wasted without any guidance and opportunity to technology. Thank you.
Who wants to answer the question? We don't have any representation, unfortunately, from the government, but anyone wants to take a crack?
Okay, so since it's a question related to the digital space and how to innovate the education, I think what we heard yesterday in some of the talks as well, that we need to redefine and re-innovate our education system, right? And when we say re-innovate the education system, it doesn't have to be the traditional education. You know, as colleagues was mentioning, that if you know how to use your mobiles, if you know how to use different apps, that is a certain set of education you own. Now, in terms of digitally empowering these individuals and the masses, I think the education needs to be done on the mindset rather than on actual curriculum, to empower them, to enable them to think beyond the lines, think outside the box. So then there are medium availables, like for example, as you've mentioned yourselves, that you've learned it from your own sources. Maybe it could be YouTube or Udemy, or there are tons of resources. So I think this is, the onus is not on the government only. It's on us private players as well, that how and what are we doing to enable our work base, our user base, and the masses to go beyond the box, think beyond the box, and try to learn things those are not taught in traditional universities or colleges. So I think in terms of initiatives, there are many initiatives the government has taken, but still, as again going back to the discussion yesterday, the quality needs to be checked, and I think that should be the focus: the quality versus the quantity. That we're going to train 1 million people. We can train less, but with quality, so they can in turn create the blockchain effect.
Yes, please.
Yeah, I just wanted to add to that point. So definitely, I take that as a very well-meaning kind of a comment, and I think it shows that people have a genuine interest in using technology and education to alleviate people out of poverty, especially in the agri sector. So I just wanted to mention, so the University of Faeyza generally in Pakistan is known as a seat of learning. However, I've seen their curriculum. It's great, but in fact, my views are shared by some of the PhDs there as well. They're so busy in their day-to-day sort of teaching, and any one of you who's part of an educational system, this is an area which really sucks you in. This is something that they started to mention. So like if you take the example of livestock, so no one knows livestock better than the woman living in the mountains of I don't know where. And what this professor was mentioning, and I thought this was a very valid comment, and I'll repeat that here. There's a need to bring her learning, and in his case, he said, A, I've got no time, B, I cannot understand her language. So, I think that there's a huge opportunity to bring in the real world, how agriculture is being practiced, and the academic side, because the academic side can bring in international global practices and all that, And if we link it up with the real farmer on ground, I think there's a lot of learning. So how many of you even know that there's an agri calendar in Pakistan, which has, I don't know, 12 or 13 different months, and their months are not, either the Islamic calendar or the Gregorian calendar. Their months run in terms of, the season, and that was their very sort of layman kind of way of assessing, how to approach their agri technologies rather. So I think there's a huge opportunity if there's some edutech that wants to get into the sector. That would be a field that's worth exploring.
Thank you, Faeyza, for sharing your thoughts, and everyone please join me in thanking our distinguished panel and for them taking the time and coming and joining us today. Thank you very much.
Thank you so much. To all of you, thank you so much. And if I might now invite, please, Air Chief Marshal Sohail Aman. He's in the house, is he? Sohail, here he is, wonderful, just to give a recognition to all of our panels. So please stay with us. And we're really, really happy that you've been here. So thank you, Air Chief Marshal, for joining us to present the tokens of appreciation. So first of all, if I might invite Professor Michael Sung. So, and we'll get the group picture afterwards. So if you two could step out just a little bit. Step out a little bit to the front. Well, they don't follow my instructions too well, do they here? I'm not. There we go. All right, wonderful. Now look it. Now we're cooking. Okay, super. And Michael, stay on the stage, please. Nadeem, Shaikh. Nadeem, please. We're delighted. Thank you all for your input. It was very, very interesting. It really was. And again, stay on the stage for a group photo. Faeyza Khan. Faeyza, thank you so much. And I love that last comment on the agribusiness, what's going on here. Mohsin, Muzaffar. Faeyza, stay with us. We're going to take a group picture. Okay. Be careful who you give your handbag to now around here. Qasif, Shahid. Again, thank you all so much. And to our wonderful moderator, Muzaffar Aqil. Muzaffar, thank you so much. And now stay for a group photo. Put you all together there. One group picture. Thank you so much. And I know we were just talking about agriculture there a minute ago in that question that Zisha brought up. Thank you all so much.